again to another short lesson. In this one, I'm going to be focusing on the May June for the year 2024. So I'm going to do a couple of calculations from this paper. Make sure that you look for all the videos that pertain to this particular paper. To begin with, I'm going to start with 1.1. Here's my 1.1, and let's see what they want. The bookkeeper has recorded all the entries regarding fixed assets in the books. Complete the amounts denoted 1 to 3 on the fixed asset note and is turned to get 12 marks. Okay, so let's begin with number 1. Number 1 is over here under our buildings, and we are required to calculate the cost of buildings at the end. So you will see that in this question, they did it differently. In most cases, you would be given additions, but in this case, you were given a disposal. And the examiner wanted to see, are you able to come back to the cost at the beginning? So it's very simple. You can take your 9,421,300. And you know, whenever we calculate from the bottom going up, if you're from the bottom going up, you change the sign of the 420. So instead of it being a negative 420, you come and you say plus 420,000. So it will be 9,421,300 plus the 420,000. That will then give you your 9,841,300, like that. Okay, let's go to the next one. Number 2. Number 2 says calculate depreciation on vehicles. Calculate depreciation on vehicles. Depreciation is calculated as follows. Vehicles at 15% per annum on cost. And when I come to my vehicles here, I see that I have additions. That means this is a new, and now I have the cost at the end, which is my 786. What I need to do, remember, whenever we calculate depreciation, we calculate for the sum: sold, old, and new. In this case, we don't have the sold, but we have the old. So let's start with the old now. On the old, I'll take my 786, which is at the end. I know that in that 786, I have already added the 260. So I will take out the 260. All right. Remember that 260 becomes my new. The 260 becomes my new. So I'm saying 786 minus my 260. Let me see how much I'm going to remain with here. So I'm going to say it's 786,000. Okay. That's 786,000 minus 260,000. That will give me 526. So here I have my 526,000. That is my old now. And then I'll now say that 526,000 now, that 526. Then I multiply that one. Remember, I'm calculating it on cost. So it will be 526. Then I multiply that by the 15%. And I know that my old will be there for 12 months. Okay, so I'm simply going to say 526 multiplied by 15%. And then that will give me my 78,900. So here I'm going to have 78.9 here. That is on my old. Let me come now to the new. The new has a cost price of 260, which is what I see here. And they say a new vehicle was purchased on the 1st of October. And we know that the financial year is ending on the 29th of February 2024. So I'm counting from the 1st of October until 29th February 2024. So I'm going to say the 260 multiplied by 15 over 100 and then multiply how many months now? So it's going to be October, November, December, January, and February. So I have 5 over 12 months. Okay, let's come here then. And then we now say my 260,000, then I multiply that by 15%. And then I divide it by 12 and I multiply by 5. And then that will give me 16,250. 16,250. Then I'm going to add my two amounts here then. I'm going to add these two amounts, and then that will give me my depreciation for the year. All right. So I'm now going to say my 78. Okay. I'm now going to say my 16,250 plus the 78,900. And that will give me my 95,150. 95,150. That becomes the answer for number 2. Let's go on to the next one now, which is calculate the carrying value on the equipment sold. So here is my equipment here. There is my equipment, and here I see this disposal at carrying value. And the disposal at carrying value, that is number 3 over there now. Okay, so we want to calculate that disposal at carrying value. If we come to this information here, we are told this is an extract from the fixed asset register in respect of the equipment sold. So it had a cost price, and then here we're given the carrying value. So this is the carrying value as of 28 February 2023, which is the same as the 1st of March 2023. That is the beginning of the financial year. So it means here I have my carrying value at the beginning, 57.6. So if you are to calculate the carrying value at the date of disposal, it's easy to say carrying value at the beginning minus depreciation will give you carrying value at the end. So I'm coming here now and I'm going to say my carrying value at the beginning is 57,600 minus my depreciation. So now I need depreciation for this particular asset. And we know that we are calculating depreciation on equipment on 20% on the diminishing balance. That means I just need the carrying value. So I'm going to take my carrying value, which is already my 57,600, and then I say multiply that by the depreciation rate, which is 20%. And then we count from the beginning of the financial year, which is March, until the date of disposal, which is 31 May. So it's going to be March, April, May. That means I had the asset for 3 over 12 months. So I'll come in, then I'll say my 57,600. Then I will multiply that by 20%. And then I'll divide by 12 and I'll multiply by 3. That'll give me 2,880 minus 2,880. That is my depreciation. That will now give me my carrying value at the end. So I'll now say my 57,600 minus the 2,880. That will give me 54,720, and that becomes the carrying value on the equipment on the date of disposal. Okay, so watch out for the next one. Okay, it's important, guys, that you continue studying. All right,